to the Compliance Kitchen podcast. This is Sylvia, and in today's episode, let's take a look at a recent enforcement action coming out of EU, where the European Commission issued a press release on December 2nd. They advised that they completed a cartel investigation into the Forex or foreign exchange spot trading market and imposed fines on 5 banks. The Commission decided to impose a total fine of 261 million euros on the 4 banks that decided to settle. That was UBS, Barclays, RBS, and HSBC. And the Commission also fined Credit Suisse 83 million euros under the so-called ordinary procedure. The Commission investigated the trading of the G10 currencies, which are the most liquid and most traded currencies worldwide. There are actually 11 currencies. It's the euro, the British pound, Japanese yen, Swiss franc, US, Canadian, New Zealand, and Australian dollars, and Danish, Swedish, and Norwegian crowns. So when companies exchange a large amount of different currencies, they usually go through Forex or foreign exchange trader. And the main customers of these Forex traders include asset managers, pension funds, hedge funds, major companies, and major banks. So according to the release, the Commission's investigation started with an immunity application that came from UBS, which was followed by applications for reduction of fines by the other parties. The investigation revealed the existence of 3 separate infringements concerning the Forex market. It was found that some Forex traders were acting on behalf of the banks that we mentioned in this situation and exchanged sensitive information and trading plans through a chat room called Sterling Lads. Exchanging this information enabled some of the traders to make collective informed market decisions versus the usual situation where a trader makes an independent decision on whether to buy or sell. So the release further explains that on occasion, these information exchanges allowed the traders to identify opportunities for coordination. For example, through a practice called standing down, whereby some of them would temporarily refrain from trading to avoid interfering with another trader. So a little bit more on the fines. Fines imposed on companies that are found in breach of EU antitrust rules are paid into the general EU budget. The member states' contributions to the EU budget for the following year are reduced according to how much was paid from the breaches that went into the budget. So the fines therefore help to finance the EU and reduce taxpayers' contributions. Now, in this case, the fines were set on the basis of the Commission's 2006 guidelines on fines. Under the Commission's 2006 leniency notice, UBS received full immunity for revealing the existence of the cartels. Thereby, they avoided an aggregate fine of some 94 million euros. Barclays, RBS, HSBC, that's the remaining 3 banks out of the 4 that decided to settle, cooperated with the investigation and accordingly received reduced fines. In addition, under the Commission's 2008 settlement notice, the Commission applied a reduction of 10% to the fines imposed on Barclays, HSBC, RBS, and UBS in view of their acknowledgement of participation in the cartel and of their liability in this regard. Now, if you're wondering about the jurisdiction, in accordance with the EU-UK withdrawal agreement, the EU had jurisdiction over the case, which was initiated before the end of the transition period. Or so-called continued competence case. The collection of the fine, the calculation of the UK's share, and the reimbursement will be carried out by the Commission. Now, to make reporting easier, the Commission also set up a tool for individuals to alert the Commission about any anti-competitive behavior while maintaining their anonymity. So they do have a tool or hotline, if you will, to anonymously report anti-competitive or cartel activities. As far as action for damages, under the European law, any person or company that is affected by anti-competitive behavior may bring the matter before the courts of the member states and seek damages. The Antitrust Damages Directive makes it easier for victims of these types of anti-competitive practices to obtain damages. If you guys want to take a look at a guide on antitrust damage actions and how to quantify these damages, I have that guide available on compliancekitchen.com along with a commission's action against cartels. They have a separate cartels website for that, and I have the link for you available again on the kitchen's website, as well as the different leniency notices, settlement notices, and guidelines on fines that I mentioned during this short update. So if that's something that you want to check out, head over to the website. And as always, thanks for stopping by.